So guys, in this video I want to show you two of the most useless indicators that you need to avoid when you are trading. It's not every indicator that you need, neither is it every indicator that you can use for trading. Some are just totally useless and I don't see their use at all. So I am going to show you two of those indicators. When you are in your trading view, go to indicators, click on it. Then you are going to type average directional index, or you just type ADX. That is one of the indicators. So ADX, look at it over here. I will tell you what they said is the use of this indicator, how to use it, and you agree with me how it is totally useless when you are using it. So I am going to edit the setting to increase the boldness of the line for you to see it clearly. Then I'm going to click OK. Now the essence of this indicator is that it measures the strength of a trend. So if you have a downtrend, the way you are seeing it like this, it measures the strength of the downtrend. And according to those that use it, of which I tried it, it is very useless, is that any time that the range is above 20, others say 25, some say 30. I tried it on 20, 25 and 30. All are useless. So it has values that range from 0 to 100. However, I am going to place it, for the purpose of this video, I'm going to place it at 30. So you can be watching this particular level here by the right hand corner. I am going to place a straight line at the 30 mark. So I have it there now. So we have the ADX at 30. What they are telling you is anytime the price goes above the 30, it means that the trend of the market is very strong. So if we are in a downtrend, it means the trend is very strong. And you can agree with me that at this particular level, price passed the 30th mark. You can see it here on the chart. Price passed the 30th mark. So what this indicator is telling us that this trend is still strong. So even if you were to sell the market at this particular point where you are seeing it, let's enter for a sell. So we are going to short it from this particular level. And where will your stop loss be? Above the previous high that was created. Where will your take profit be? At least you should be getting 1 to 2. But did you know that, look at it, this was where the market, just 1 to 1 that the market is giving. And by the time you follow the indicator, you will see it dip down again below 30, which is telling you that the trend now is weak. And after how many moves? Just look at it at your point of entry. It's showing you again now that there is a weakening of the trend. And one thing with the indicator is it does not give you the type of trend. So whether the trend is an uptrend, the indicator will be above 30. Whether it is a downtrend, the indicator will be above 30. So at this particular level now, when the trend is pushing upwards, look at it, is still below the 30th mark. And by the time we scroll up and we see the indicator past this one, the 30th mark here, look at where it is showing you. Is a lagging indicator. It's showing you that the trend is strong at this particular level. So if you were to take your entry at this particular level, where will your stop loss be? The previous low. And when you just move up, price started retracing, the indicator has fallen below the 30th mark again, showing you now that there is a weakening of the trend again. So I don't see the use of this indicator. When the price is falling, you will see it is above it again, telling you that the trend is a strong trend. So it's left for you to also know the trend yourself and also know when to take entry. Now, if you know when to take entry and to know the trend by yourself, what is the use of the indicator? It has no use to me. It has no use. It's totally useless. So this is the first one that you need to avoid. The second indicator that you need to avoid is go to your indicators, the same trading view, and type on ZigZag. Now I am going to click the ZigZag plus plus because it gives you the signal as well, higher highs, higher lows. So I will click on it, and this is how it will appear on your chart. Now, to better understand what the use of this is, it is trying to point for you the price reversal points. So it will show you where price is going to reverse. That is the use of this indicator. So you may think it is accurate because you are seeing that it is forming points of reversals. At the exact point of reversals, you see price reversing around that point, and you may think as if you are going to take multiple trades because you see here, it will tell you price will reverse here, you sell, you see it here, you buy, you sell, you keep following it like that. When you do that, you blow your account within 1 hour. It's a totally useless indicator, and I am going to prove it to you. I have to use the 1 minute time frame so that you can see how it is in a live market. This is GBP USD. Now, at any point that you see, it has two colors. So the bullish color, green, and the bearish color, red. So where the bearish color ends is telling you a reversal is going to start there. So you are going to start buying. And where the bullish line ends, it's telling you the bullish move has ended. So you are going to start selling, and you keep following it like that. Now, this is telling us that there is a bearish move and it has ended at this last candle. At this last candle. That is why it is pointing to this particular lower low for us. You are seeing it. But did you know if price pushes down, this lower low gets adjusted? It keeps adjusting. So it's more of like it will wait for price to reverse, then it will now finally remain there permanently. But if this price reverses and goes downwards again, let's say price goes downward from this level now to another lower point, this particular point will be repented back to where the lower point got to. So if you were following this indicator thinking price will reverse here and you start buying, price will come down, then it will now adjust itself and come down too. If the time that price pushes up, it will show you that there is a bullish move. When you see it, you think price is going to reverse maybe somewhere here, and it will not. When price pushes up, it will adjust this higher high that you are seeing it. So it has no use to me because it's just following what price is doing. After price has painted or printed whatever candle it wants to print, then it will now adjust and follow it like that. So what is the use of the indicator? So I am going to show you how it works. I will fast forward it for you to see how it is moving. This is 1 minute time frame, so I am going to leave it a bit. The moment price goes lower than this, you see this lower low will be adjusted again. You can see it has been adjusted just now. So what is the use of it showing you? Because if price pushes up again, this one will be maintained as a lower low, and you may think as if the indicator is actually telling you when to buy. Now, if you had started buying around this point, this price movement will take you out, and if price goes further than this candle again, this lower low will be adjusted again. So it's just like you are having something like this, so it will tell you anytime another candle is printed, it will keep shifting, before it will show you again that it's moving. So what is the use? The indicator is useless. You can see it has shifted again. So don't think as if this thing is giving you any signal to buy. It will keep dropping like this. It has no use. So just avoid these two types of indicators. Let me know in the comment section whatever type of indicator that you think is also useless in trading. If you have any question regarding this type of indicators, or you think as if there is a way you use it very well, just let us know in the comment section. Do have a nice day. Bye.